Isn't that awesome?
So, make a note about that, because we'll talk about that later. In a neutral market where there still might be some seller opportunity and the buyers, you know, might want a home and there might be a couple of offers, this might be something to consider. They can put that E&D hard, provided that they met all of the other qualifications.
That's right.
That's a good way to get your loan approved.
We actually had a listing agent reach out to me yesterday on one that they had, because they had multiple offers, and you know, the listing agents will reach out to the lenders from time to time to say, how solid is this buyer? Well, we have a credit approval from an underwriter. So all we need is an appraisal, we can close within 2.5 weeks. So that could be the turning point sometimes for a sale. If you're trying to capture a buyer and try to sell quick, that pre-approval letter might actually win if it's a better deal, you know? So that's one of the things. It's one of the many things of why we like Guild. Guild actually supports to a lot of different organizations, and we sponsor, you know, it's called Guild Giving. So whatever we want to donate to, I don't know, like St. Jude's or whatever organization we want to give back to, they will match up to $500. So if I decide to give 500, they'll give 500 to $1,000. That's kind of cool, right? So when you think about throughout the year, if you guys want to do things, we actually just got approved to do Toys for Tots. So if you guys want to drop off some toys, our branch will have a big box, and we're going to do it until December, till right before Christmas, and then we're going to go and give it to them. But with that being said, V&A and Maria are probably,
And Erica.
And Erica, yeah, Erica's not here, but she's manning the home for them while we're here. But I just wanted to take the time to be here to support them because they're amazing. Everyone at Guild I think is pretty amazing, but this group right here has to set apart to anyone. I mean, they do speak Spanish, but they go above and beyond for their clients. She'll tell you up front if the client can get approved or not, but even at the tough ones, she fights for it. So but no further ado, this is V&A.
Good morning, everybody. Like Joey said, I'm V&A. I've been doing lending for about 20 years. We're originally from California. I've been in Vegas for 4 years. So, you know, it's been a while. This is what I do, and this is what I do 24/7. Amelia is, like you mentioned, Amelia is a past client, and you know, we were really happy to help her, and thank you for having us, Amelia. I'm going to wrap up at the end. I want to give the floor to Maria because she has a unique product that is exclusive to Guild. And then I'll talk about, you know, all the tough ones. But this is a unique product that, you know, like I mentioned, is unique to Guild, exclusive to Guild. And I think that you guys will find some value to it. So go ahead, Maria.
Thank you. Thank you for having us. Good morning. My name is Maria. I'm part of V&A's team at Guild Mortgage. And I want to talk a little bit about a 3-2-1 loan that it's only exclusive to Guild. It's an awesome loan. It is a conventional loan. It is for down payment. It's, I would say, a little bit of down payment assistance that does help a lot of our clients. There's a few pointers that I want to give out. We help out the client with $1,500 for down payment or closing costs. We do offer them a $2,000 gift card at the end of the transaction, 3 days after we fund our loan. And
Sorry,
this
say that again.
$2,000 gift card for the Home Depot. They could purchase anything they want at the Home Depot. So if you have a home that the buyers are putting in all their down payment and all their closing costs, and you know what, they really like this home, but it doesn't have a refrigerator, it doesn't have a stove, they're like, I don't want to put an offer in because I don't have the money to invest on a refrigerator. Well, you know what, you could say, we could give you $2,000 and you could buy a refrigerator or your stove, and that could probably save your deal. You know, the only thing you cannot use this gift card for is to pay down their debt. If they have a debt at Home Depot and they want to use it to pay down their debt, they cannot do that. But they'll get it when V&A will attend their signing, and V&A will give them their gift card, and it'll be activated 3 days after their funding. Okay? And the only requirements for that is that they must be a first-time home buyer. They have to have a 620 minimum FICO score. And the MI is a lot cheaper than a regular conventional loan, and they're only required to come in with 3% instead of 3.5 or 5% down. We could layer this with other type of down payment assistance except the HIP
So this
program.
one, 3% down.
Correct.
Okay, to get the gift card
With-
and everything.
Yes, you get $1,500 for,
And that's connected with the DPA?
it, not here,
Not
but
yet,
you could use Wish, Lyft, Culinary, and we could
Oh.
combine it if you want.
Okay.
If you want, cause our CLTV could go all the way up to 105. And it's connected to, with that,
And that's, if you wanna do like, by a point on that, you can do that?
yes, you can do that.
To do what?
Buy down the
By
rate.
yeah.
Yes.
Yes, you can buy down the rate. This is for, owner occupied, first time home buyers, primary residents only, and purchase transactions only. It is for 1 units, condos, and PUDs, no manufactured homes, debt to income ratios at 45, and it is a conventional loan.
And the rates are really, you know, they're not like super high, because usually on down payment assistance, you're gonna find that you're probably like about anywhere between 0.5% to like 3/4 higher than what the market is doing. So the 3%, it does offer like what market rate is.
So, what is the price range to qualify
It's a
for that?
conventional,
Yeah.
so you could go up to 453
Okay.
or 100 on, so it's comparable to FHA, but Clark County, you're at 280, no, 290, yeah. So it gives some flexibility to go a little bit higher,
Okay.
yeah. And, you know, it's 620 FICO score, it is DU, you know, it does need to be, Freddie, I'm sorry, approved. So, but it can go as low as 620, where DPA, you're at 640.
Or 660 if you
And the
want.
credit score has to
Yes.
be up sixes, right?
The higher the FICO score, the cheaper the rate, the cheaper the MI.
Okay.
That's just the way
But like-
conventional works.
What is the lowest,
620.
620?
Yes.
It says on the sheet too.
Oh, sorry.
And the 3% too can also be a gift.
Mm-hmm.
So if the parents wanna put down 3%, instead of like an FHA, they have 3%,
Oh,
then we give back 1,500 towards their closing costs, and they get the $2,000. That's what the 3-2-1 stands for. So the 3 is 3%, 2 is the 2,000 gift card, and then the 1 is the 1,500 closing cost credit. Yeah, so, it's a really, I mean, it's a conventional loan, it's unique. We're the only ones who have the relationship with Home Depot. And the story behind that is it's completely legal. A lot of the agents are like, I don't know if it's RESPA. It's 100%. Guild is not gonna go on anything that is not RESPA, approved. But the reason why it's Home Depot and not Lowe's, cause I kinda asked that question, is because they were the ones that called us back. So I asked product development, I'm like, why Home Depot? Like Lowe's has got some cool stuff. They're the only one that called us back on it. And then we've done it across the country. So we've done over 700 closings already on this program. Really, really cool. So.
And another thing too, the 1,500, if you have a buyer that the seller's paying all the closing costs, could be towards the down payment as well. So not just for the closing costs, but for the, down payment. So that's, you know, that's also a good pointer. It is required for at least one of the buyers to take a home buyer education class online. Other than that, and it's only for occupying,
Residents only,
yes.
so.
it's not investments, nothing like that.
Well,
So
they're occupants only.
non-occupying
Yeah.
co-borrowers or anything like that, they all have to be primary homeowners.
And what does it mean, home buyer education required?
It's just like a
The-
short class.
Online,
Almost
an
all the
online
DPAs
course.
require them.
Okay.
correct.
Do you guys have any questions on the 3-2-1?
No, we're good. Actually, we're good.
And you know what, what's different about this one is that we service this one. So we service all of our loans except for the Home is Possible, right? Cause that's a US bank.
Yeah.
And Jumbo, because we use different investors for that. But we service all of our loans, and this is one that we service. It's not a HIP, it's by Guild. So we actually can pay the payment to us, all that good stuff. It's not gonna be sold off.
And also the mortgage insurance is, it's lower than a regular conventional as well, so that's.
It's really targeted for first-time home buyers.
Okay.
I love it.
Yeah.
Can't wait to sell to some clients.
Yes, yes, exactly.
That's what we want to hear.
Yes.
So, along with all the programs that every other lender does, you know, I tend to do things a little different, and my team, as Julia mentioned, we're all bilingual. I have Maria and Erica, who are my assistants, we're all bilingual, so, you know, you sometimes come across it, well, I don't speak, it's okay, just pass them to us, and, you know, we'll, you know, be your translators if you may, you know, so, along with that, you know, does anybody know how low FHA goes on their FICO scores?
Is it 580?
I'm sorry?
Might be 580,
Okay.
540.
Anyway,
No idea.
no. Have you ever had like a lender run credit and be like, oh, their FICO is here, I can't do it?
Yes.
Yes? What was the FICO score?
I think it was 520.
Okay.
It was a while ago.
Okay, so FHA does go for your traditional 3.5 to 580, right? But FHA goes down to 500. Okay, that is considered a manual underwrite. You're not gonna get a DU approval, but there's compensating factors that FHA requires, meaning you might have a low FICO score because, you know, they don't have enough credit. They had a bad, you know, credit history and they're on their way for the last 12 months, they've been on track, but their FICO just hasn't caught up to that. So compensating factors, you know, money saved, a big down payment. There was one that we closed, I think she had like a 510 FICO score or something. But she put a big down payment because she got a settlement. Everybody had turned her away. No, because right away, that's the first thing, nobody's willing to spend the time and say, okay, well, what about this, what about that? That's what we do. We don't like turning anybody away, and if they are not able to purchase today, we put them in a plan to like, okay, in the next month, 2, 3, 6 months down the road, let's do this. So if we do all these things, you're going to get into your home, okay? If normally, I mean, loan officers would just be like, sorry, can't help you, move on to the next person. Everybody wants a home, everybody deserves to own a home, right? So we wanna be able to help them.
I wanna say something to your comment. So a reason why a lot of the lenders will say no to anyone below 580 is because, have you guys heard of overlays for the lenders? So like Chase Bank, Bank of America, Wells Fargo, they all were like 620. Some of them will go down to 580, but HUD goes down to 500. So overlays are what the banks do. They say they layer what the actual guidelines are. So if you go to HUD and it tells you what is required for an FHA loan, the lender who's giving the money will say, well, we need this for the basics of guidelines, but we also want this because we're putting our money at risk, right? So they'll say 640. Well, FHA can go to 500. So ours is actually a 580. What she has found is that what Guild will do for her clients, it's because of how she packages it. So I just want to make sure you guys understand what that means. So most of the lenders in town will say 580, we can't do it, I'm not going to touch it because it's too much work. Well, she cares about every single client. Not that they don't care, but she'll put in a little bit more time. And she'll look at the compensating factors. Now, if we get an automated approval that comes through and it says a refer eligible, that means it has to go manual guidelines. We have to ask for an exception. It's not something that just goes through and we're like, oh yeah, we'll go down to a 500. We're not that bank, but what she does that's different is that she'll look at the compensating factors. Okay, well, if we got an approval that says a refer instead of an approval, automated, then what do we have? Low LTV, low DTI, assets in the bank. Okay, that will compensate for the low FICO score. Or maybe they're paying off debt. She structured that way too. If we know we're paying off someone's debt on the low FICO, we're not going to be so worried about taking the risk of lending to them because we know in 2 months their score is going to get jacked up because we're paying off all their debt, right? So she looks at things that other banks don't. Now, yeah, most of us in town are a 580. You're not going to hear a lot of people say, we're going to go to a 520. Yeah, give me all your 520s. No, well, she's not the 520 girl. But what she will do is when she gets it, she's going to evaluate it. And she's going to be like, okay, we just had one the other day. This gentleman wants to pay off all his debt. He's at like, he's gonna be at a 21 DTI. He's at a 499. Okay, we're not the 499 people. But if we could pay off his debt, we know it's gonna shoot up.
But
The
then you
problem
pull at
is
my
it's-
heart.
Yeah, I know, her heart gets tugged. But we can't
His
because
wife
it's not a
died.
500. It's off by 1 point, so we can't help him. We're gonna have to wait like 30
Yeah,
days and then
but
submit it.
you know, it's,
Right.
you know, that, it's life circumstances, right? His wife died and, you know, things happen, so. What I'm getting at is, you know, when we run credit, it's like, okay, we're gonna help you get to the next level, right? To the next point, which is, okay, now you're gonna start looking for homes and stuff like that. So, more of the story is, don't give up, we don't give up, we work together, we make it happen, right? That doesn't mean that every loan's just gonna be a slam dunk, but if we're all on board for working together and let's help these people out, it'll, you know, be a win-win situation. Does anybody have any questions on, even on the program that we're not, we didn't discuss today? No? You're
No?
like, no?
The two, is
Okay,
it
two one?
Yeah, 2-1, is that, how soon is that gonna be available?
Oh, no, we've been doing that.
Oh, so you
Yeah.
can't do that?
The 3-2-1?
No, the 2-1 or 1-2 or
The
something.
3-2-1, the one with the Home Depot?
No, where like you pay a.
The 2-1
lower-
buy down?
Yeah,
Oh, we have that, yeah.
okay, cool.
Do you know how that works?
Kind of ish, no.
Do you guys wanna explain it?
It's
Is
like
it?
you pay a lower fee for the first year and then it comes up to market value or,
So basically,
first 2
you
years.
still need to qualify at the highest rate,
okay.
okay, cause that's gonna be your note rate.
Mhm.
But you start off at a low payment, you buy it down there?
So is it still buying down? Is it still considered buying down?
Yes. Yeah,
Yeah,
there's
so it's
still, there's
purchase-
still a cost to it,
Okay.
Mhm.
yeah. So, yeah, go ahead.
Yeah. So say that today's market rate is 5.5%, right? So we'll qualify them on a 30-year fix. It's FHA or conventional. It's a 30-year fix, 5.5%. The first year will be 3.5, second year will be 4.5, and then 5.5 and on. So how many of you guys do listings in here besides you? Just you, Rick?
No.
A couple of you guys do
Yeah.
listings too? So how many of you guys want to offer a lower rate for your listing, a lower payment, kinda like the builders do, even though they're still being financed, it's not a negative amortization loan, it's here's a $300,000 property for a payment of only $1,500, even though it should be $1,900, right? Because it's about $200 difference on the payment every month, but how it works is, the total amount for the 2 years is like $8,000 difference in payments, from the 3.5 to 5.5. So you got $8,000 here that they're not paying. So either the seller or the lender pays for that. Or the buyer can pay for it too, but most of the time it's the lender and the seller. So if they've got closing costs and they wanna do the 2-1 buy down, then we can apply all that to that, and then all that money goes to escrow. And the escrow takes it like extra $200 every single month and pays the payment, on top of what the buyers are paying.
You
They're
mean
paying 3.5.
to the lender's impact?
Yep, to our income
Yeah,
account.
okay.
So it's already paid, right? But for them, so like a lot of you guys have renters, if they are like, well, I'm used to paying $1,500, but I know in a couple of years I'll be used to paying $1,900. Okay, well, let's do the 2-1 buy down, because it eases them out of renting, and I know.
Yes, remember 2006.
But it's not an interest on. So
You're
there's
right.
no negative amortization, it's fixed for 30 years, they already are pre-approved at 5.5%, I'm just using that as an example. So we'll tell them, look, this is what your payment would have been today, $1,900, but we're gonna go ahead and give you 2 years at a cheaper payment, kind of like buying a car with no interest, right? They're paying an interest in principal payment though, they're just paying their interest off of 3.5 on the first year, 4.5 on the second year, and then 5.5 for 3 to 30.
So the seller and the lender are paying that extra costs that are incurred
Yes.
if the buyer's not.
So they'll never be negative, it's already paid up front. It's paid to title takes a chunk out of every single month back to us and pays
I
the
have a
payment.
question about the, buying the point on
Mhm.
like your interest rate. So like, it's better when your interest rate is higher, or it's better anyways to make your payments lower,
Well,
to buy down a point?
You mean like what's the value?
Yes.
At what point?
Yes.
Do you know the answer to that?
I'm not understanding.
So I think what you're asking is, was it better just to keep where the payment's at today or buy it down at what threshold, right? They tell you if you're gonna spend, a certain amount on buying a rate down, you wanna pay that back within 2 years. So like, say, you know what I'm saying? So if they say, well, if today's rate is 5.5 par, right?
Yes.
But they want in their head 4.875. Well, that's gonna cost a point and a half. Say that's $3,000.
Mm-hmm.
You take that and divide it by 24 months, you look at the difference in payment. So you look at a 4.875 rate, and that's gonna put you at $1,500. But today's rate's 5.5 at no cost, and that's at $1,600. So you take the extra $100 a month payment, times 12, that's $2,400, right? And then if you take the cost of 4.8, and that's $3,000, it's an extra $1,000. Is it in their benefit to buy the rate down just because they want 4.8?
And I think to answer your question from our position,
Yeah.
you're gonna have a buyer that says, listen, I've got the cash to buy the home, I want my mortgage to be lower.
Yeah, that's my point.
Or you've got somebody that says, I don't have the cash to buy the home,
Yeah.
but I make really good money month over month. So you have a product and you have a seller contribution that would fit either bucket.
Cause I hear people say like, I only can afford this amount a month.
Mhm.
And if the interest rate is in some amount, they'll be higher than what they afford. So if they buy point down, the mortgage will probably be lower than if the interest rate was up.
I think
That's
if
my
it's cost effective, where it makes sense financially, like, okay, how much are you saving every month versus how much you're dishing out? I think that because you could have a borrower that has a 700 FICO score, or you have a borrower that's at 620, the cost is gonna be significant, difference.
Yes.
So if it makes sense for them financially, I would, to me, a big, might be a big difference versus your borrower where it's like, $100, yeah, that's a big, to me, that's a big difference.
Yeah.
Whereas a borrower where, it might be like, well, that might not be too much, but so to each their own type of thing.
Yeah, if the
Right.
mortgage every month will be like $100, $150 less, then I think it's worth it.
And it's worth it.
Yeah.
You know?
It depends on what they really want, right? So we
Yeah.
look at that, they evaluate that and say, well, if you wanna spend your 3,000 on a lower monthly payment, then let's do it. If they wanna know what the savings is and the plan of their money, maybe they can put that money somewhere else and make more money instead of buying it down and saving just a little bit when they can make more money somewhere else. So I guess it's just really, it depends on what their current situation
Okay,
is.
and just sitting down and just, exploring all the different options for them, so that when they walk away, they're like, okay,
Yeah.
I kinda know what, all my, options, and they can decide,
Okay.
Anybody else have a question regarding?
I do have a question actually, and it's regarding what we were just talking about, because I have a friend who I've been trying to get her set up with a lender for the longest time now, and I understand that she's kind of far out, because she's not looking to buy until February.
It's not that far out.
I
Yes,
know.
I know.
That's-
Well, I know, that's my point, is that, so I'm trying to figure out what the best approach to getting her in front of a lender. I think she's afraid because this is her first time, and she was also talking about paying off some debt. And I really want her to, before she comes out here, to definitely sit down with a lender. Or not just sit down, but conversate with the lender. What would be the best way to going about that, like, in terms of her buying down her debt?
Well, definitely you wanna know, I mean, for us, like, we wanna know what her plan is, right? We wanna respect what her plan is, what her goal is. And just because you're talking to me today, I have borrowers that come back 6 months to a year later and they're like, okay, we're ready. It's just leading her in the right path, like, this is what you gotta do, if you wanna do it now versus if you wanna do it in February, but, it's knowing, it's basically knowing, because they think, a lot of people, borrowers are like, well, I have really bad credit, I'm like, you think you have bad credit, you think you can't do something, but let us, hold your hand through it and walk you through it, and once you explore, like you said, once you explore your options, you decide when you're ready. But at least you know what you can do now versus what you can do in February. So it might just be paying, like you said, paying off debt. It might be installment debt, where it's like, okay, you have 5 months, well, you can wait for 5 months, and then this is how much more money you'll have available to you.
Gotcha.
So I think it's just, we don't pressure them, like Julia said, when we meet with a borrower, same thing, it's funny, but I met with a borrower yesterday, Sunday in my office, and they're not ready till February. And we said, okay, well, what I do and my team does is we just go ahead and move you right into underwriting, because we wanna be ready before you're ready. So whenever you decide that you're ready, we're not gonna start scrambling like, oh, now he wants to buy a house. We are ready when you're ready.
Isn't the underwritten approval only good for so long, though?
I think it's 90 days, if I'm not
Yeah,
mistaken.
so I was gonna say, so it's free, right? So that's one thing, you can tell your client, it's free to get pre-approved. And the other thing is our credit reports are good for 120 days. So if we pull now, we don't have to re-pull until March, right? So whatever, and they may not have to pay off their credit or their debt. A lot of clients think, and they may, but that's when she's gonna look at it for free. She's gonna pull the credit good for 4 months. Underwritten approval's good for 90 days. All we need is updated pay stubs or whatever else we need, right? But yeah, it doesn't hurt at all. And when they say free, and they know that it's good for 4 months, because other clients are like, I don't want my credit pulled again. We don't have to, we won't. We won't even pull it again. We'll keep the same one.
And I think to add to that, guys, and this is important for you to understand, this is the lender that is going to write the loan on their approval. Let the lender do the heavy lifting. Let the lender say, we don't want you to pay off all your debt. Because contrary to popular belief, there needs to be a certain amount of credit. Credit is like a tree. okay? And you can have a really, really, really thin trunk, and it could be 20 feet in the air. And that would be weak credit, but they could have a 700 credit score, and they can't buy a free lunch. Or they could have a very wide trunk, and that tree is only 10 feet in the air. So they might see that they don't have great credit rating, high credit score, but they have a lot of credit. You know, they've got a $20,000 credit card here that they do X with. They've got 3 car loans. So a lender's going to look at everything individually and say, listen, we don't want you to pay off all of your debt. In a general case, everybody's individual. They're going to say, this is the plan that we do need in order for us to give you a loan and help you buy your home. So we always want to get our buyers in front of a lender, because that's not our job. It's not even the consumer's job. They're going to go to Credit Karma. They're going to get something from Capital One. That is not the same credit score. There's so many different types of credit scoring companies out there. There's Legacy and there's FICOs. And we need to go with what the lender's going to use, because that is what they're going to base their decision off of. So always get your client in front of a lender. And contrary to popular belief, when a lender pulls a credit score, your credit might fluctuate very minutely. And even if they go and shop lenders in a defined time frame, there's going to be they're going to overlook that. Okay, now if you've got somebody who's a 501, they're going to go meet with the lender. The lender will say, okay, we're going to do this to strengthen your credit. The lender probably is going to say, don't let anybody pull your credit for a while. Let's just fix these things so that we don't do rapid rescores anymore, right?
Yeah, we do.
Are you still doing it?
So we run the simulators.
Yeah. Off of like a soft pull.
Well, when we run their credit, and you know, the borrower's like, well, what if I do this, or what?
Sure.
We tell them exactly, if you pay this, if you delete
Yeah.
this, if whatever it
see what
is,
their score will
where their score will be.
Yeah.
And we pay for it, they don't pay for the rapid rescore. They pay for their debt to be paid off, but we pay for the rapid rescore.
And a lot of times they'll say, hey, we I have clients that have had situations where they needed to pay $300, towards this credit card, and they needed, which was a $20,000 credit card. $300 towards this credit card. Pay down this utility. Let's challenge this one thing that's on your credit. And in 45 days, it all got done. And that was just part of their down payment. You know, they said instead of $3,000 down, you're going to come in with $3,750. We're going to pay all that debt at closing, and it became a very manageable, easy to swallow opportunity. So it's so important to get them in front of the lender. I cannot stress that enough. Let the lender do that heavy lifting. They now become an advocate for us. So now your client is talking to the lender. The client's talking to us. Okay? They get scared. They do want to walk away sometimes. You know, they don't know what's in front of them. So when you have a partner that's saying, hey, I talked to your client yesterday, this is what we're doing, hey, here's a weekly update. Isn't that awesome?
Yeah, you just said it. You know what? A lot of people wonder why, like, what can lenders give back to you guys, right? And a lot of people are like, where's my leads? Well, we don't have leads like you guys lead. Like, we help, maybe we can split 50-50, or, maybe do Zillow or Realtor.com. But what we have that's unique to and no one else is that you guys can actually load up your pipeline. So like to what she was saying, what Dina was saying was, if you got someone now that's a 520 and they can't close for 4 more months, that's gonna be money in your pocket in 4 months, right? So that's what we do as lenders. So we know within 5 months, we've got enough people in our pipeline of TBDs. And I don't know if you guys know, but Guild's been #1 in the marketplace for the last 9 months. You guys been seeing the title reports?
And they're nationwide.
And #1, and we're nationwide. Over 60 years in business, so we're not going anywhere. We're not a small-time brokerage or a small lender that only has, 10 billion in servicing. We have over 70 billion in servicing. So Guild's not going anywhere. They ain't going sold out. We're here for a long, long time. So if you guys have buyers now that you're like, I know they can buy in 3 months, get it into VNA's pipeline. Let's issue the pre-approval that has the underwritten certificate of the credit protection that protects their earnest money. Because then they know that they can buy, and then you guys have your pipeline built out for 6 months to 12 months.
Right.
So that's what we can offer to help you guys. Yes.
I think you just answered my question, but you also do business in California, correct?
Yes, she's licensed in California.
I used Guild in Texas on a new construction that closed 2 months ago. Just so you know.
Thank you. One more thing I wanted to add about pipeline. So I helped
She
manage
manages
the
my
front.
front.
So
She's
let's
my
say-
upfront girl. Erica's
And she does that client, so what we do too is we update our agents. You send us a contract, we call you and say, well, thank you, you know, we got the purchase contract, we're gonna get the ball rolling. We give you weekly updates, not just you, but the listing agent as well. If we see something that, you know, we let you know when the CD goes out, when the appraisal was ordered, when we expect the appraisal to come back. And if we have an inspection already set, we let you know if the inspection's gonna be done this day at this time. It came back at value with conditions, and these are the conditions. And we CC you and the listing agent. When we also send the needs list out because we have an approval. Remember, we have a TBD, we have an approval with prior to doc conditions. So when your purchase contract comes in, we're sending the prior to doc conditions out to the client. And we like to include you guys in it. You know why? Because we're sending this out to the client, we're letting them know, hey, time is of the essence, we have a close of escrow set for this day, we wanna make sure everybody's on board to close on time, if not early, if everybody's on board. And if you know that this is a second or third email, that could trigger you to pick up the phone and say, hey, Mr. Smith, I see that Maria and Erica's been reaching out to you and you guys haven't got this conditions over. So you guys will be on our team and helping us. We need, like, pushing them to get conditions also. And if we see a bump in the road, we also could say, you know what? We're foreseeing a little tight at the close of escrow. Can we structure the close of escrow? We're gonna need an extension. And what's better than no news? Some bad news, right? So we always like to stay in communication with you guys, whether it's good news or bad news, and say, you know, we might need an extension. We don't like asking for them, but sometimes we have to, but we wanna make sure that the seller, as well as the buyer, organize their time of moving in and moving out, and that way nobody's stressed or everybody's blowing up your phone, hey, your lender's not calling me, something's going on, and so we rather communicate than no communication at all. So that's what our team offers, differently than other teams don't. So I always say, good or bad is always good. Of course, ours is always good. But that's one thing we offer, and we like to keep our agents when the CD goes out. Cause you know, that could come, the 3-day waiting period, and all that good stuff. So that's another thing that we offer too, communication with both sides. You know, there's some stuff we don't share with the listing agent, that you're our VIP, so we have special, you know, information that we provide to you that we don't provide to them. But definitely on our needs list, you guys are always included. That way you guys know, you know, where we're at, what's our next stage. So, and if everybody's on board, we reach everybody, hey, is the seller on board to close early? Okay, we call you as a borrower, are we okay? Is title set to close early? And if that happens, we close early. So, but we try to stay on board on our close of escrow, but, you know, with your help and everybody on the same page, we make that happen.
Amelia had a question.
So I didn't have a question. You were talking about how you guys communicate.
Yes.
Now, obviously, back in the day, I didn't work here, but I was that buyer, that scared buyer.
That buyer.
That buyer. I was that scared buyer. And in all honesty, guys, that's why, I mean, I've had such a close relationship with VNA because at that time I was going through divorce, going through everything that possibly, and the communication and that sense of feeling secure in what I was doing, that's what they gave me, this team gave me, so,
Good.
yes.
Thank you.
And we graduated together.
Yes, we just calmed down.
Craig, I'm still looking at you like,
How is that
you still look the
possible?
same.
Any other questions, guys?
You know, I do have,
So,
I have one more.
yeah.
I-10.
Okay,
ITIA.
yes,
ITIA.
yes, Julia's favorite topic.
Sorry.
Well, because, you know, not everyone wants to be the 510, I-10 borrower, right?
I'm the
510.
lender of it all. I
Yeah.
work best under challenge.
Yes, you do.
So I-10 is rolling out, God willing, in December, okay?
Before
So-
Christmas is what they're telling us.
Yeah.
And
so-
for foreign national too.
Yeah.
Foreign national and I-10.
So we still do the DACA. Does anybody come across DACA?
Not
Okay.
really.
All right.
Just for
well,
conventional.
Just for conventional.
Yeah.
So, those are work permits for all the other people who don't. For all the people who don't. So,
Did you wanna talk a little bit about the VA loans right now? Is any changes?
Julie?
Can we
I don't think there's any changes, right?
I
No.
don't know.
She switched, hey, no, I appreciate that. No, so,
Changes in VA? I don't think there's any changes in VA.
no,
But
do you
I
guys have any
mean,
questions
we
on
do
that?
them, they are awesome loans for the, I mean, it's 0 down and, again, that one can go as low as 580 as well, right?
Mhm. It's
Maybe
whatever
less.
DU actually approves.
Yeah.
DU or LP, which is our underwriting system for Fannie or Freddie. So if we get an automated approval on a lower credit score, then we take it, cause it's
And
VA.
you, that's a good question. So you have both products, right? Fannie and Freddie?
Yep,
Yes.
we're direct servicers to Freddie and Fannie, Ginnie and FHA.
Then is Fannie coming out with a 100% loan? Are you involved in that?
I haven't heard of that yet.
It's it's a conventional 0 down. We had somebody
Yeah.
from FWC, whatever.
FEC.
Yeah, Brad Watts had said something at our team meeting last week, to the market center about it.
Let me ask our
If
product
it's rolling
development
out,
director.
then we're getting it, it's just,
Yeah.
we probably haven't gotten updated on our product, but, there was another one
So
that-
back to ITIN, not to cut Fernanda off.
Mhm, Fernanda.
So we have a database of somewhere around 300 people that if there was a ITIN product for them,
Yes,
they're cash rich and credit poor.
Yes.
They typically have a tax ID number.
yes.
I'd love to dive in a little deeper on that at some point.
Yeah, I think, once it rolls out, we can come back and just, it is not your traditional, loan, but definitely we are rolling that out and, yes.
Sorry, so these are for people that don't have a social security number? or-
So it's very common, I'm gonna speak because this is, our
Latinos.
Latinos, they
I'm
come
gonna
to
teach
this
you taxes.
country and they get an ITIN number, meaning that's
Gotcha.
how you file your taxes. And it's just not Latinos, it's anybody who's,
Sure.
but because that's what we come across more often. So they work off of a fake social, okay, but you cannot report taxes on a fake social. You have to report them on your ITIN, but an employer will not pay you
Yeah.
on an ITIN. You have to have that fake social.
Invalid
Invalid.
social.
Okay. All
That's a
right.
little better.
An invalid social that they got somewhere, no, just, an invalid
Invalid.
social. But you need to file, so the product will only ask for your tax returns, because we don't wanna know about the invalid social. Okay, so, they usually have their passport, I don't know if they can.
Or maybe there's,
I don't know if they
their
can.
photo ID from their country,
Yeah.
that's another
So
one.
so you're not using a consulate card.
Maybe, that's
Possibly,
an
you
ID
can,
from
but I
them.
know that they probably do not have
You
like
can get a passport here,
Right,
so that's
yeah.
not necessarily.
I've
a
been
problem.
there, I had that before.
Yeah, you had NITIN? Okay,
I had yeah, cause I just got my citizenship like a couple years ago.
yes,
But I had that before.
right,
Yeah.
so were you able to get an ID in,
No, I have everything now.
no,
Now,
not
but when you
now,
got here.
but, yeah, so we would
You
go
have
off
my
the
my
passport.
passport, yeah.
Uh-huh.
Mhm.
So,
So maybe, once you have the product
yeah,
kind of rolled out, you
we'll reach
understand.
back out, and then
Yeah,
that way you guys
we'll
can
have
meet.
a meeting and, cause I'd like to get really clear on that and we can scrub that database and
Yes.
see if there's some opportunity there.
For sure,
Okay.
and they usually have money.
Yeah.
Yeah.
Yeah, it
Under
was
the-
never about the
under
money.
Under the mattress.
Under the
That's right, we can get them to season
Yeah.
it. They know they're gonna buy, we'll
Right.
put it in a bank
2
account
months,
for-
come on, put it in the bank.
4 or 5 every month, 4 or
Yes.
5,000 one day.
Yes.
Yeah.
Yeah.
And to your question on the 0 down, I just reached out to product development, so as soon, and he's the one who told me Christmas time for ITIN. So as soon as he lets me know about the 0, I'll let VNA know, and then she can let you guys know about what if we're gonna be able to participate in that program or not. And I just wanted to share one thing that I just learned, a couple of us learned last week.
Oh, yeah.
Oh my gosh, so you guys know about, the non-occupying co-borrower, so if you've got parents that wanna buy for their kids or if the kids wanna buy for their parents, they could be non-occupying co-borrowers, right?
And Brian is going to take notes because he wants to teach a gifting class.
Oh, well, this is amazing,
There
because
you
I've
go.
been doing this for over 15 years,
Gift
and
card
this
class.
just came out, and I didn't know that we could do this. So, the non-occupying co-borrower, normally, if it's a parent buying for their elderly or a parent buying for their student,
the occupying borrower that's not going to qualify with income, like the student, obviously doesn't have money, they're student, they're still on the loan to, credit qualify, right? You still have to have a FICO score. Not anymore. I know, I just learned this last week, I was like, what the heck? So, say I wanna buy my student, that's, my daughter, she's in college, I buy her a house. She does not have to be on the loan. I am the non-occupying, so it becomes a primary residence on the loan for her, but she's not on the loan.
Oh,
I know.
that's odd.
No, it actually just came out about 45, it is odd, I couldn't wrap my head around it, I'm like, well, how do they know that, all we need is a lot of explanation?
Oh, wow.
I know. So you have to, and I'm sure the underwriters are gonna run some kind of report to see if the last name matches, to make sure that this person really is in college, they're gonna do probably due diligence, but we technically can't ask any questions on the person who's not gonna be on the loan, because we can't pull their credit, can't ask them, they're not affiliated with it.
So
But
who
I'm the
pays-
parent who's gonna buy my daughter a primary residence, and I'm the non-occupying co-borrower, and I have nothing to do with my daughter, but it's gonna be her house.
But it has to be family.
Yeah.
Yes, it has to be family, it has to be either buying for the elderly or buying for the student.
What, first?
But they no longer have to be on it.
Yeah, like either mom,
But the
dad, or
requirement
brothers.
is, you
Correct,
know, you
yes.
come in as if she was primary residence,
Mhm.
rate and down payment.
Not second home.
What about,
That's
primary,
No,
that's
primary.
nice.
what about buying for like brother, sister? Does that not count?
We have the guidelines, we can share them, so that'll be two things, the
I
zero
think
down
it's-
and the non-occupying.
I think it's first lineage.
Yeah, I think it's
um,
first lineage too, I can't remember if it said aunt, uncle, I don't know
I
if
could
it's the
buy it
same
for a
thing
mom
as.
and dad, I could buy it for a kid.
So who takes,
Yeah.
so who do the mortgage payments go to in full then?
To mom.
Goes to mom,
Goes to mom.
cause that's a person who's qualifying,
But,
Who's
or
in
dad.
debt? Who's in debt?
so it's
So
going off
mom
mom's
and-
credit.
Off the
It's-
person who's on the
It's
application.
it's in mom and dad's debt,
So
whatever.
now we can all go back to our parents and say, guess what, you can buy. With
Yeah,
no
it goes
money
on
down.
their debt, their
Because,
parents' debt,
and
yeah.
then eventually when brother, sister, child gets a job and can qualify for that.
Yeah, make it be on the
then
deed
they
too, so you can close them in the name with the deed,
Oh.
they just, yeah, so you
So
can do
then,
that.
will can they just take over the loan? and put
Within
the debt
within
into their
12
name?
months, trying to make the payments, if they can't make it
They would
because
have
they're
to
students
credit
and they
qualify
can't.
at that point.
Then they would
Correct.
credit qualify, but then it can transfer out of mom's debt
Yes.
to dad's debt and put it into theirs.
Yeah, so that's a little bit of a change, cause we used to have everyone on the application, and the person who's gonna live there has to credit qualify, but not anymore. I know, it's amazing, so anyway.
So we'd like
Just wanna
to
let you
teach a class on that.
Yeah.
So if you can do your due diligence, Brian will be the point person on that, and as early as middle of next month, maybe beginning of January at the latest,
Okay,
and we'll fill the room.
Okay.
all right.
Perfect. Yes.
Okay, so what happens in the death of that borrower? How would that just be reverted back through,
Back to
insurance?
the.
Back to the.
So, what I mean, it's never, I mean, in my opinion, it's never a good idea to be on title by yourself, and if you are, there should be a will, or some type of, knowing
But
that.
then would they have to qualify?
I mean, is it, the lender wants their payment, right?
Yes,
Okay, so title is title, loan is loan.
yeah,
At some point, yes, you would have to refinance and put it under,
your name,
Yes.
qualify.
Yes.
That's what I figured.
Yep.
Unless you do what most people did for the last 60 years, they just made the payment every month.
yeah.
Yeah, and no one ever, yeah, get me anything.
So if you guys don't mind, I thank you so much for this opportunity, for everybody, thank you so much, and, if you guys don't mind, if I can get your business card, we'd like to keep in
No.
touch with you.
What?
I'll come around.
I don't have them yet.
You don't have
Oh,
a
you
temporary one, huh?
Not anymore, no.
No?
Look at that.
Do you guys mind if I take a picture of everyone?
I'm gonna.
Do you mind if I share it on
I'm
Facebook?
having a bad hair day.
Whatever,
so-
you're, I saw you already messing with it, it looks fine. Do you guys mind if we do? Can we take a picture?
Yeah.
Okay,
Sorry, you didn't get the memo.
Okay.
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 What time? 'Cause I do have to go home and check.
Thanks, Shady.
Yeah, absolutely. I'll
Danny's got my-
send
she's
you
got
all
my-
and,
Yes, how are you?
You have ours.
I will email you.
Okay.
Wow.
Bye.
Yeah.
Thank you, guys.
Thank you. Thank you. Anything
I'm
you
gonna
need.
email you right now. It was so confusing.
Yeah.
Oh, we'd love to help you.
I know you would. I appreciate that.
Yeah.
Good.
All right,
good.
guys, smile.
So we're all gonna get a photo.
Smile, smile, smile. Ready? One, B&A. B&A.
Yes.
Oh, geez. 1, 2, 3. Awesome, thank you.
They're
guys.
You guys.
6th.
Yeah?
Yes, oh, well, when
So
they
you
start the
didn't say
meeting.
that on purpose, right?
Say what?
Like, your team moved?
No, probably some people find the answer recognizes, so I didn't want them to, make sure that they understand why we moved in more.
Craig, gonna take 5 and come back, or? Yeah?
Yeah, we're gonna start the sales meeting at 11:30, guys, so you got 10 minutes.
Oh, did you?
10 minutes.
Let's do it. Okay, do a selfie. Okay.
You're leaving now? You all ready? Is there anything I can do to help you?
Yes, I am.
Okay. Spark still? Okay, it's like everything's just done.
Yes, I
Fannie
know.
Freddie,
Yeah.
Fannie Mae, Freddie Cash. They're like the originators of like money for loans.
He wants to wait a year.
Oh.
So they have to do a, okay.
You need to respond.
Awesome, well, thank you. Give me a hug, happy Thanksgiving, and you know about Tuesday, right?
The good thing is, you don't really know a whole lot about this stuff.
No, next Tuesday.
So it's just-
After bowl, we have the escape club, and then we have, party at my house. Yeah.
But like,
And if
I
you
didn't
want,
know about the
to
party
bring
in your
sports or
house.
something, just tell
I
Amelia.
never needed to know anything about Fannie Mae and Freddie Mac.
I didn't know the party in your house.
Huh?
I didn't know about the party in your house.
It's on the flyer.
Yeah.
We're gonna talk about it today.
Yes, I know,
Good to
so
know.
like I said, their meeting is 6, they're coming here at 6 tonight. I'll have all
Yes,
the information.
yes, just set up an appointment and, we'll sit down, we'll brainstorm, we'll put it all together.
I'm Julia, nice to meet you.
Yeah, have
So
them,
post it, I'm gonna
have
take.
them be the presenters. I'll be
Okay,
here.
we'll be in touch.
We'll,
Okay, all right,
It's gonna be very
Bye,
conservative.
DNA.
Like, she makes more money than what.
Bye, good to see you again.
Bye.
I get like more now, and that's why she can like more push on different things. Because those are old, and she got a raise like right after. So she's so if you could talk to her.
Hey, I didn't have a choice, so.
I was just told. So.
Hi, Patty.
Patty's always eating.
Patty's very blue today. Why is Patty so blue?
Patty, can you see
Okay.
me?
Okay, yeah. Because I know they don't have any money for down payment. Yeah, I know that, and then I'll ask about gifts. I'll ask about gifting to them as well. But yeah, if you could just give me a rough estimate, because I know that'll probably be a lower level than what they, so yeah, because I know they're and I don't know what they do or how much they make, I didn't know their big stuff. But yeah, if you could just give me a quick rough estimate, that way we can kind of go through some homes tonight while they're here. Yeah, exactly. Alright, perfect, thank you so much,
Okay.
I appreciate it.
And then I would,
Yes, thank you.
so we need to know when the cross is
Yeah, just give me a call.
They said they're gonna roll it
Thank
out
you.
in December, so we have to do it after it rolls out. And then just, yeah, we can meet, we can get all ready to go, and then we'll just schedule the, I like to do things 20 to 30 days, so we can market it, make a big deal out of it. So yeah, just schedule it, and then we'll have Ross go through my calendar and let's just make it happen. Sooner rather than later is better, okay?
Hola.
I was gonna talk to you.
How are you?
Who's wanna share with me this?
What is it?
Are you
Your son?
So where are you staying? Yeah, but like where are you?
Might not work.
You sleep on the, let me, oh, that's the kitchen, that's.
Yes, ma'am.
Where were you?
Slow.
Well, they only
Thank you very much.
I guess that's good.
Go your car?
It's out there, it's a little green on the, you probably see me stalling pulling out of the parking lot.
But everything's working good?
Everything was fine.
They failed.
The only rough part about the car is me, is like, cause it's a manual, so I'm not too good at it still, so I have stalled it a few times for sure. How was, everything? How's your trip? Yeah.
Mexico was great. It was a lot. Those aren't really vacations. Because of like what I'm down there for. So it was,
Yeah, you're like chasing them the whole time, right?
yeah, it's like it's all for the race. Yeah, so it's fun. Like there were some times that we got to like enjoy like Ensenada and do a little bit of like tourism stuff. But like for the most part, it was literally just me chasing him around. But no, they would have gotten top 10, but there was a lot of bike issues this year.